everyone. So I know it's been a while since I've been on, but I want to get back to doing these YouTube uploads, reviewing some trades and some market analysis I'm doing and stuff like that. Um, my personal schedule had been a little hectic over the summer, but now kids are back in school and stuff like that. So hopefully I can get back to doing these a bit more on the regular. So I've got some. I'm going to keep doing the reviews of trades that I break down, and I'll let obviously note which ones I actually take and things like that, or which ones are just hindsight reviews. Today's gonna be a mix of two trading days, both Monday and Tuesday this week. Monday I did not participate in the market. Just I'm trying to not trade Mondays in general, and then also just with I just knew, like, I didn't have a good start to my day yesterday, so my mental state wasn't there, and I was just kind of running all around and um, trying not to put that I would be like forcing a trade in that condition. And I took a loss today, but ultimately it kind of goes back to there's no news today, so I probably shouldn't have really been trading today anyways. But I did see a setup form, but I went against my gut and kind of rushed a trade in just to get it in before I was walking out the door for a vet appointment. And sure enough, had I listened to my gut, the entry that I was waiting for would have came through. But instead, I rushed and took a -1 R on that trade. So with that being said, I'm going to go ahead and jump in with Monday's price action and kind of review that first. Again, that's fully hindsight. I didn't, participate in any moves on that day. And I've already shared this to the Telegram channel, which the link to that is in the description of this video if you want to go check that out. I tend to post updates throughout the day, the AM and PM sessions on what I'm looking for and things like that. So there's more frequent updates there than there is on the YouTube channel. But again, I'm hoping to get back to doing these videos more often. So first, I have this in replay mode, so hiding today's price action. So I kind of want to go over, what I was expecting. Let me try to get this a bit more. It's kind of all overlapping. I don't really like that. But anyways, so this week, actually, I'm going to back up one more. I'm going to hide Monday's price action too. Okay, so this candle right here, this last up close candle, was actually, sorry, I need to back up one more. Okay, so this is where the week started. This was Friday's price action, the 12th. So I started this week with a bullish bias, with the draw on liquidity being this purple dotted line here, which is a weekly level. As you can see, there's these relative equal highs over here. That's too clean. Like, it's obvious price is going to draw up, and it may not run past those like aggressively. It may just sweep them, and then we might consolidate with FOMC being this week. I was kind of expecting Monday would push up into that, maybe into Tuesday would push up into this level, into this teal shaded box, which is a daily fair value gap. You can see that right here. We have a daily bearish breaker with this solid teal line right here. So there's a lot of higher time frame resistance here, or premium arrays would be what we'd be looking at. So this higher time frame daily push up, if you were in this move on like a position trade or a swing trade and you've been riding this up for weeks, this would be the area you'd be looking to get out at. So I'm anticipating the bullish momentum to kind of stall out and consolidate here, and we very well might keep going up. But short term, I'm an intraday trader, so I'm looking at, my first objective for the week was this purple line at 43.0350. Okay, so I'm going to drop down into the 1 hour, and we'll see. Let me let me fast forward a bit here. Okay, so this is the weekly open here, New York midnight for Monday. Okay, so we've got our Friday low, our Friday high, our previous week high, our previous week equilibrium, and the weekly open price right here. Okay, so I'm gonna just kind of fast forward through this a little bit. So we get into this was Monday London session, or these yellow dots here. So actually, let me drop down to the 15 minutes so you can really see what we're doing here. Okay, so we have a gap on the weekly open here. That's this orange shaded box, right? So actually, let's go ahead and just back up to the beginning of New York session for Monday, so I can walk you through kind of what this was doing. So we had the Sunday night, Asian low, Asian high. For New York midnight on Monday, you'll see London came up, formed a high, left the Asia high intact though, and then declined in price, took out the Asia low. Okay, so we've taken sell side liquidity. Okay, so we're digging into that. We're digging back into Friday's range, right? So if we do a fib for Friday's range, you see where this orange line is, that's our 50%. That's equilibrium of Friday's price action. Okay, so we'll kind of go in. Okay, so start of New York session. Look what this 8:30 candle does, which is the lift of the news embargoes. This is the start of our New York kill zone for indices. Okay, so it's a big bearish candle, immediately runs below the London low. Okay, so we're digging further into that range. Now, if we're bullish on the day, we're looking for price to go below equilibrium of our dealing range, which is Friday's price action. That's the most recent swing point, swing low to swing high is Friday's price action. So we're looking to get down below equilibrium. Okay, so far we're kind of right at it. Okay, now look, so we came down, we took out the London lows, we set a low, we kind of wicked into the equilibrium, and then we ran higher. So we've started to take, so once we take sell side and we're in our kill zone, we're looking to break swing highs, which we're doing. So okay, so now we had the big displacement higher, right? Now you may be like, oh, I missed the move already. But, we want a dip into below the lows. We want a big displacement higher when we're bullish. And now we anticipate a retracement back into this new range, right? So we'll see the next candle, it comes back down. So we'd be looking, we'd be looking, anything below 42.6650 is where we're looking, right? So I'm going to delete that just so we don't have a lot of lines on the chart. Okay, so at this point, I would be dropping down, I'm going to stay on the 15 minute for this. I'm trying to, okay, so we're retracing back down, right? So we'd say, okay, so we're coming down, we're coming down, we're coming down. Okay. So let's drop down into the 5 minute here. I forgot exactly what entry time frame I found the entry on yesterday. Oh, okay, yeah, so it was the 4 minute, that's right. Okay, so you see this was that large bullish displacement move here, right? So we came up, we started retracing down. Let me put the fib back on here just so you can see what this did. Okay, so this, below this orange line, so you see we came down, we tapped the equilibrium here for Friday's dealing range. We came up, we broke all of this, right? We took out the London high, we took out the Asian high, we peaked back above the weekly gap, above Friday's high, and then we started retracing. So here we would drop down to the 5 and the 4 minute, and we see it come back down to equilibrium. Okay, so we're like, all right, so we've set a low, it retraced back up. So now ideally, we kind of want to see it to keep playing around down here. It comes down again, but notice it did this, set a swing high. We didn't take that out, we retraced lower. Came down, set a swing high. We didn't break it yet. We haven't broken a swing high yet. We come down one more time, we take out these lows here. So you could have been a buyer below these lows, but what I do is I like to wait to see it go below the lows. We're at a higher time frame, narrative spot where we're set to go higher. We take out this high. Here, let me draw some lines to illustrate this. Okay, so we're below the low. We take out the high, okay, with that right there. And then what do we have right here? Fair value gap. That's the entry. So my model, the way I like to do this is I take a fib and I like to go 50% of the entry, which would be 42.7125. Okay. 42.7125 would be pretty much a perfect entry on that. Go below the swing low. I think. Yeah. Swing low. 90. 3 to 1 is what we'd be looking at. You could also, if you wanted to do a more aggressive, you could put your stop here below the first candle of the fair value gap. You could also put your stop here because it's already run these lows with this candle here, so presumably it wouldn't come back into this area again. I'm gonna, if I remember right, I think I had marked this up, that I always give it one handle 4 ticks past that. So then let's go ahead and do this. So as you can see, like it came down, wicked that entry, and then we ran back higher. So the take profit here ends at 42.9375. And if you remember, actually let me back up to the daily real quick. Sorry, I want to put these higher time frame PD arrays on. Oops. I want to put these on the chart so you see what we're looking at here on the lower time frames. Okay, so here's our purple line. Here's the start of that daily fair value gap. As you can see, in all honesty, I like to just go for 3 to 1. But, and I actually think on when I shared it on the Telegram, I had put it at the 4,300 full whole number, which as you can see, because I mean price is usually drawn to like whole round numbers like that, so that would have actually been close to a 4 to 1. But as you can see, it kind of fits like perfectly right in between the weekly relative equal highs and the start of that daily fair value gap. It kind of rests right in the middle, so I think that's why I had set that for yesterday when I did the review on this for Telegram. But as you can see, I mean price, we kind of run up, heading into the lunch hour, that gray shaded vertical area, that's the New York lunch period. We don't take any trades there. So, but it would have, over the lunch hour, it would have cleared that 4,300. If you had only went for 3 to 1, it would have done it even sooner, right? So we had a 3 to 4 hour trade there for the morning session. I had also posted a continuation move in the afternoon session, so let me show you what that did. Okay, so I don't remember what time frame that was on. It might have been on the 3 minute. Come on. TradingView can be so slow sometimes. Okay, so we came up, my eyes were still on the 4303. So for the New York PM session, we would have been looking for a retracement back. I think yeah, so this was that might have actually been a 15-minute. Yeah, that was a 15-minute fair value gap. But yeah, so if we're looking on here, we're coming down. I'm trying not to miss where it was. Let's see, was it on the 3-minute? Might have been on the 2. Let me look back at the telegram where it was. Yeah, okay, so it was on the 3-minute. So essentially what we had, oh yeah, okay, here we go. Let me do this to just kind of illustrate this a bit more. This one, might not have seen this real time, but hindsight review, you're kind of picking it apart. So basically, we've been bullish on the day. We've got an upside objective of 4303.75. So we'll see after the lunch hour, price ran up, broke down, made a swing low, made a swing high, new swing low here, broke below that swing high or that swing low, so we wicked below it. So then we'd be looking for a swing high to be taken out. It's right there, and then boom, boom, we have a little gap right there, So you could be a buyer. I think that's only like a single tick gap. So again, very small gap. So in an instance like that, you can't really split the difference. So I would have just taken the more conservative entry. Go here, 1, 2, 3, 4, 51 for 3 to 1. And actually, I don't think that was actually the entry. Where did I put? Oh, okay. So for this one, with it being a continuation move, I sought to be a little bit more aggressive with the stop loss placement. So as I mentioned, you can put it so I would have put it there, 1, 2, 3, 4, 30, 3 to 1. Trying to remember where or maybe I had put it here. I'm trying to remember where I had actually put this stop, because 4302.25. Well, maybe that must have been it. But yeah, so I had put a bit more aggressive because again, we had already run bullish on the day. It was a quick draw to this liquidity is what I was framing it on. We took the sell side liquidity, we broke a high, we retraced back down into a small fair value gap. So, I was looking at price to run up aggressively. You also probably could have gotten an entry, in here somewhere maybe as another little stack. So that would have hit there, and as you can see, this red line, I already have today's price action marked up, so you'll see how high it goes, So, ultimately, it does run higher. So, if we had put this at the 4303.50, which was the target, right? That was my bias for the day. You see, going for that, you actually could have given a bit more room on the stop loss. You could have came down into here, something like this. So you don't have to be as aggressive. Sometimes you can look at your draw on liquidity, which sometimes even they recommend going a tick past it. or like a handle past it, so 4 ticks past it. So if you did that, you know, you could have done this, you could have done this, and got to, you know, given the trade a bit more wiggle room. So like you see, there's a lot of different ways, and this is why, you know, 100 traders can see the same setup and all get different results from it. You know, some are going to be more aggressive, some want to be more conservative, some might only want to go for 2R on a continuation move like that, you know, since it's so tight to the draw and liquidity. But yeah, so basically, you know, the PM session, no news, it's a Monday, so you're not expecting a ton of volatility. So just this simple kind of retracement in, you know, back into like this kind of little last push up. You know, you get a little dip below the low, a dip above the high, comes in, you enter in here, you know. So yeah, so that was Monday's price action. So I'm going to go ahead and exit replay mode and go into today's. Okay. So for today's price action, so you see Monday overnight. Okay, so this was market close on Monday. So you see the Asian session, we set an Asian low that sat in this 15-minute fair value gap from Monday, which I chose this one because this is the candle here that broke above, you know, all these highs and stuff. This is the candle that really pushed up. As you can see, price did come down deeper into this range, into this weekly open gap, which we'll talk about in a minute, that I should have anticipated a move like that. But so we had the Asian low, the Asian high. I think typically what I'm learning is I want to see when I'm bullish, I want to see the, oh, we're still running, okay. I want to see the London session, I want to see it keep going, you know, I want to see it kind of take the Asia low, you know, but kind of leave the Asia high intact as like, you know, levels that price is going to want to go up to. So you see London came in, we kind of consolidated to start, or before London. As soon as London opened, it ran down, took the Asia low, found support, you know, air quotes, support in this fair value gap, ran higher, and, you know, left the Asia low intact, but did take out a couple of swing highs based on the 15 minutes. So in reality, which I'm never awake for London, but in reality, you know, you might have been able to get a little piece of something in here around like, you know, 6 o'clock, 6:30, because I bet if we drop down into the 5-minute, see, so dropped below the Asia low, you know, ran higher. So really right in here, this little gap here, you could have gotten 1, 2, 3, 4 entry opportunities into that gap. But as you can see, it didn't run very high. It just kind of stayed in the range for the London candles, and then, you know, you would have gotten stopped out at the start of New York. I don't really trade the London session, so, you know, I don't really know how best to capitalize on it. But again, it's worth noting that today is a no news day. There's nothing going on today, so I expected just kind of back and forth rangy price action, which is kind of what we had all morning. So then the green dots here start the New York open. So as you can see, we left the London high, the Asia high intact. So we had those two, you know, we had retraced off the weekly levels. So New York open, it ran lower, which actually, let me drop to the 5 minutes so it's a bit more clear what we're looking at here. Okay, so New York ran lower, took out the London low. Now this is where I was like, great. I was like, we took out the London low, we might still be going higher. Maybe I can catch, like, you know, a little bit of a move up to kind of further poke into this daily fair value gap, right? So I was like, at this point, I was like, okay, we took sell side liquidity, we kind of went up, we formed a swing high in here, came back down one more time, ran up. So what I was really looking, and now I had a vet appointment here at 10 o'clock. So I put this trade on just before I was walking out the door. So what I really wanted to see is I was hoping that this push up at 9:30 at the 9:30 open, I really wanted that to take out the London high and the Asian high, this other dotted line. That's what I wanted. Is I wanted it to make a bigger move up and then push down. And I think this limit might have held. And as you can see, I got wicked out, and at first I was kind of mad. I was like, oh man, I should have put my stop below this swing low, and put my take profit up at the previous day's high to maintain the 3R ratio. And I was so mad at first. I was waiting at the vet, and I was like, oh man, I got wicked out by literally one tick. But then as you can see, price just kind of consolidated and then pushed lower one more time into this weekly gap. And that's what I should have been anticipating, because when I saw this low, I was like, okay, it just kind of like peaked below the London low and then consolidated. It wasn't a convincing move into the sell side. I had kind of, as you see, I had extended this over. I was kind of expecting price to come down and push into that gap even. Like if it would have came down, pushed into the gap, pushed up, broke the London and Asian highs, and then pushed back down, that would have been like the perfect, textbook setup I was looking for. So, but I was ready to walk out the door, so I wanted to get a trade in. So I, put this trade in, and obviously it lost. And then sitting in my car at the vet, as you can see, pushed down, weekly gap, took out the New York session low which this is basically, there's no news, right? So they engineered liquidity is what they did. They made a low, made people think the bottom was in, had a little run up. People are like, oh, just like me, people are like, I'm going to buy. And it was a liquidity trap. They took it lower one more time, cleared that out, and then as you can see right here, I think let's go down and find, I don't remember what time frame. I think that was the 2 minute. So as you can see, like here's that New York, that first low it made, consolidate, run lower one more time, swing high, swing low, broke the swing high, came back, wicked right into the 50% of this fair value gap. Perfect. Stop loss below here. You could have also had it below here. What you see bumps it up to a 4.6R, and if you would have put it up here, you're pushing 5-6R easily. Again, I set it at 3R. But yeah, so I didn't take this trade. This is when I got back home from the vet. I was like, that's exactly the move I was waiting for. I was just impatient and trying to sneak a move in before running out the door. So, and then as you can see, it's obviously pushing higher than I even really expected. I wasn't expecting a move, that high in reality. But, so we're pushing into this this daily fair value gap now. So, now we're kind of in no man's land, because it's like, yes, we're bullish, but this whole area up to, really up to this breaker is at 43.55.50, which is still another, 40 points above where we're at right now, or 40 handles above where we're at right now. So what I'm kind of thinking at this point is we have FOMC tomorrow. So, we might keep pushing up into this range today, or this fair value gap today. I think tomorrow morning ahead of FOMC is going to be a lot of manipulation, a lot of choppy. We might run up here above the breaker, deeper into the fair value gap. Who knows? But I'm kind of thinking at this point is they're kind of setting the stage for people to think it's going to be a bullish week. And then FOMC is going to put in the high of the week, and then we're going to go lower. Thursday we have news, both AM and PM session. So I think Wednesday PM we might break lower. I think Thursday will be a continuation of that. And then Friday might be consolidation, a retracement back into the range. But but I'm kind of looking that this level here, this PWEQ, that's the previous week 50% line. I'm kind of thinking right now, and again, I could be wrong, I'm still very new and learning, but my kind of gut is telling me that we're going to keep pushing up. People are going to think it's bullish, and then FOMC is going to, drop the hammer and pull the rug out, and we're going to come back into this, the equilibrium of last week's range, is what I'm thinking at this point. We might still very well be going bullish long term. This, for all I know, this could be the start of it, going back up. We've been bearish all 2022, we've been bearish. So, but, so we could be, it's actually interesting to look back at the price action. We've been bearish, right? So we have this double top here, price ran below it, and then we broke above it in March, and people might have been like, oh, that's the start of the bullish breakout. But in reality, it just went above that and then fell on its face again, right? And then we've been bearish, broke above this high. People are like, oh man, it's the start of the bullish breakout. Nope, went lower again. Now we've been bullish, took out this major consolidation area, here last week. We took that out with this big bullish week we had. So I think we need to come back, retest this consolidation area, and I think FOMC might set the stage for that retracement. And then, we'll see. Like I said, I don't know if we're going to keep going higher, if we're going to retrace and push all the way lower, and take out this down here, June's low. I don't know. Time will tell. It's not worth trying to figure that all out right now. Just look for the obvious draws on liquidity, which right now we've swept. We're pushing above it. But I do anticipate price stalling out in this teal shaded box. I think FOMC is going to kind of be the catalyst for either a big break to the upside again, and we're going to have another bullish week, or they're going to pull the rug out and take us lower. So that's kind of what I've got for Monday and Tuesday's price action. Based on my rules for the week, or setting for myself, I am not going to trade tomorrow's price action. I will be watching the market, but I will not be putting in any trades ahead of FOMC, which is at 2 p.m. Eastern time tomorrow. So once that kind of shakes out, so around like 2:30ish, I'm going to look to see if I can get any clues as to where it might be going and where a setup might form, and kind of see if I can sneak one in tomorrow afternoon. And then Thursday we have news in the morning and in the afternoon. So Thursday should be a day with some good opportunities, and then Fridays are always a little iffy. I'm still learning kind of about the TGIF and, whether it's a continuation day or reversal day. So Friday is kind of an unknown to me. I really need to see how Wednesday and Thursday kind of play out, and then I'll kind of have an idea of what I might be thinking for Friday. But yeah, that's all I got right now. Like I said, I'm going to get back to doing these video uploads more regularly now that I kind of have some quiet time in the house in the mornings. And then in the afternoons, I'll usually be updating on Telegram, posting updates and things like that. So make sure you check the description for the link to that channel, and come subscribe there. I'd love to get more of a following there and stuff too. To kind of share setups. And like I said, I'm doing, if you're new to this channel or whatever, I'm doing these videos mostly as a video kind of journal for myself, that maybe I can go back and watch and kind of see what I was thinking and see if it played out and various things like that. I also kind of want to get more comfortable making videos, because as I get further in my progression, I do kind of want to, do more educational type videos to kind of, not only reinforce my knowledge, but I know sometimes, if you're learning ICT concepts, smart money concepts, whatever you want to call it. I don't really want to play into the beefs online with all this stuff, but you know, like sometimes when you're learning a concept, you could watch all of ICT's videos and you might kind of be getting it, but then someone else will post it or break it down in a way or explain it in a way that just makes it click for you. So I'm kind of getting the benefit of I'm reinforcing my own knowledge, but also if I can help make it click for somebody else, I would love that. And also like if an ICT student or someone else studying ICT's concepts, or charter members or whoever, if anyone comes across these videos and you see I have something labeled as an order block or a fair value gap or a breaker, and you're like, yeah, that's not a breaker or that's not an order block, or you're not understanding this, by all means post in the comment, tell me I'm doing it wrong. Because I don't really have anyone else studying ICT stuff that can give me that feedback. So if there's anyone in the community that looks at this stuff and is familiar with ICT's teaching specifically, if I'm doing something wrong, please tell me. I will not get in my feelings about it. I want to learn. I want to keep growing. This is the style of trading that has clicked with me. So I'm definitely all in on this, but I don't want to learn something as a breaker only to find out I was wrong, or an order block or something. I pretty much only enter based on fair value gaps on, which is his YouTube model for 2022. But I have seen and gone through some of his other material about order blocks and breakers and various things like that. So I kind of have an idea what those are, but I'm still very junior in my understanding and I'm still learning, obviously. So yeah, I'd love feedback. I love comments. I'd love thoughts, share your journey, all that kind of stuff. Like I said, I'm trying to build this community up, trying to build Telegram up, trying to be active, share my thoughts, because it helps me grow. And like I said, if I can help someone else, that's what I want. I'm not doing this to necessarily build an audience or monetize a channel or anything. Sure, if I get enough of an audience and that kind of stuff comes, great. That's fine. But like that's not what I'm trying to gear up for. I'm not trying to gear up for to offer a service or something like that. Like this is literally, at this point, this is a study tool for me. It's a way for me to talk out loud, explain what I was thinking, explain what I'm looking for. Because they say that one of the greatest ways to learn is to teach someone else. And since I don't have someone directly to teach this to, I'm just going to talk into YouTube and into Telegram. And if people get use out of that, that's awesome. So that's what I've got. I am planning another video for this week to where I want to cover what was for me a game changer that I kind of picked up off of Twitter that finally got me to start journaling, because I spent years resisting everyone telling me to journal my trades. I was like, yeah, I don't need to do that. Journaling's dumb. And I've always struggled to do that, but I found a tip of somebody said the way they do it, and I've actually seen a few people do it now that way, of using a private Discord server as your trading journal. So I'm going to make a video this week kind of going maybe tomorrow morning. Since it's FOMC morning, I'm not going to be trading really. Maybe I can make a video kind of covering how you would do that. I want to kind of share what mine looks like to kind of, give people some ideas of that, if it's something that they think would work for them. So I'll be making a video this week about that. And hopefully that, maybe is an aha moment for someone to start journaling and stuff, because it is something you have to do. Every long-term successful trader journals. You have to. That's how you grow. So yeah, so that's all I got for today. And until I talk to you on the next video, stay safe, good luck, and happy trading. Thanks.